Okay. How's the how are the audio levels? Everything sound good? The microphone's like right up in my mouth hole, so it should be good this time. I was getting some water and some coffee. But now we're good. Okay. So let's talk about this thing. Well, first let's zoom out. Let's zoom out. Let's keep the same sort of theme going. So on the macro scale, not a whole lot has changed, right? The daily Bollinger Bands now are starting to expand, so that's exciting. We don't know which way the market's going to continue. Oops. We're starting to see... Oh, shit. I almost just knocked my microphone off my desk. That could have been really bad. Let me go ahead and fix that real fast. Jesus Christ. I have it, like, screwed into the side of my desk, and I guess the fastener came loose. That would have been really bad and really loud for you guys. Okay. So we see that we made a push up to the 200 EMA. Let me find my... Sorry, I'm like all unorganized. Okay, so we got the 200 EMA here. We got the 50 EMA. We got this little death cross here, but again, like I said last stream, this doesn't mean that we're just going to plummet. This just means that long term, the bullish momentum is waning and consolidation is most likely going to be necessary to have a sustained push to new highs here. But something interesting though is that we're testing this 200 EMA ish, and we broke above the 50. This is the first time we broke above the 50, and we've got a few hours left on the candle. I think it's, you know, about like 7 or 8 hours left until this daily candle closes. And at the moment, this little bro right here looks a bit like a distribution schematic that we've been talking about. So let's go ahead and take a look at that on like the 30-minute time frame. Let's get rid of I don't want you, or you. Oh, I do want to point this out real quick. So, if you've been following the stream, did I not mute this? If you've been following the stream, you know that I had a supply line drawn right here. It's kind of being covered up with a text, so I'll zoom in on it. But so you see a supply line right here, and then you see a supply line right here. So there are two ways to draw the supply line because of the way it intersected right here. If you have the top peaking right here, you have a slight, a slight angular difference than if you draw the peak right here. And so keep that in mind as I zoom in, that there are two supply lines right here. So this is like a supply zone, like region sort of thing. And let's zoom in a little bit. If you notice the first supply line, sorry, let me get this situated. The first supply line broke, right? And it broke above the trading range. So here's the trading range. This is the trading range. Okay. Basically everything below this dotted line here. I don't know why I switched to green. That was kind of pointless, wasn't it? But so we see that we broke above this. No, I want black. We broke above this supply line here. We broke above it, broke below it, retested it, and now we broke above it. And now check this out. This is really interesting. We pinged off that second one, like to the dot, to the fucking dollar. Perfectly right there. So the second supply line looks to be the most valid here. So this little region would be like, if you're looking to short, that would be like your region to short, right? And then obviously if it breaks above and finds support here and then rallies up, then this would be confirmation that like the down, the immediate downtrend has been broken and a potential uptrend is about to ensue. But for the time being, I'm set on this being a distribution. And I'm going to show you something. So someone on Twitter pointed this out to me, and it's like, this used to be one of my go-to reference materials. It was Jim Forte's article that he wrote. It's called Anatomy of a Trading Range. And in that article, he points out just different like classic Wyckoff schematics. I don't typically like to use the schematics. I like to look at historical examples. But let's take a look at one of the schematics, because it's really, really interesting just how similar it is. I'll snip this over here for you guys, and then we'll bring it over here. Let's see if we can get this to fit in here. Something like that. Is that going to fit? Ah, it doesn't quite fit. Maybe if I push this down. Yeah, this should work like that. And if I put this in the corner. There we go. Okay. So, obviously this is this, and there are some really, really crazy similarities here. And this is one of the reasons why I don't like to use schematics specifically, is because they're just an outline to get a feel for like what these things mean and their relevance to the trading range. So, you know, just because a trading range schematic is outlined like this, it doesn't mean that trading ranges have to have, you know, this up thrust after distribution, this sign of weakness at this particular location, you know, secondary test. Like these sort of things don't have to be in a trading range, but in this specific instance, they are. It's pretty crazy, right? So let's walk through this, right? So here's the preliminary supply here, right? It's circled right here. And as we walk through this trading range, we just see point by point, it matches it really, really well, which totally slipped my mind until someone on Twitter pointed it out to me, and I retweeted him. So kudos to that guy for bringing that bringing that up. One of the, I mean, obviously this is you know, matches it really well. Like, so you see the secondary test, we see return to the bottom of the trading range for 8, and we see return to the top for 9. Then we see a sign of weakness where it breaks a new low here. And this is where it starts to get really interesting, because it breaks a new low on decent volume, and then it just slowly trickles back up. And this is the first time in my memory that I can recall us actually doing something like this. We've done something similar to that, but nothing that's just like so blatantly like this. Like this chop, I mean, that perfectly embodies this whole region right here, which would make, if this is following a distribution, this would make this the up thrust after distribution. So up thrust after distribution is a the point of it is to give an illusion, to trap bulls, to give an illusion of a bull rally and a resumption of the uptrend. That's the whole point. Is it's supposed to look like a breakout, and ultimately what's going to confirm that it's not a breakout is if we return to the trading range. If we return to the trading range, pack your bags, the shit's going down. I feel very confident in saying that. I mean, watch, I'm probably going to get proven wrong. It's going to like rally to like $20,000, but but for the most part, I feel confident in saying that. I shorted up here. I initially shorted down here, but I got stopped out and I re-shorted up here. So I'm really, really happy with my entry. But so you have to ask, right? So what's next for this trading range? If this is an up thrust after distribution, well, that would keep in mind, you know, like I said before, that the schematic doesn't have to follow this point by point. It just so happened to do it this time. So, you know, we might not see something like this before it goes down. It'd be cool if we did. Like, it looks like we're starting to do something like that with this being number 12, right? So the 12 tests the secondary test high, which is just what we did here. So possibly sometime during the stream, we might see a failed new high here, and then a drop to you know, back inside the trading range. If that happens, like, cool, that makes our job a lot easier for analyzing this market, because, you know, the roadmap is right here. What the hell was I gonna say? Oh, so keep in mind, it doesn't have to follow this anatomy to the T, but if it does, we should see a test, you know, somewhere here, maybe a retest of the supply line. That'd be beautiful if it did, right? That'd be like very poetic in the sense that it retests the supply line here and here, boom, boom, and then it drops. But if it does, look for a retest of the bottom of the trading range. The typical strategy for trading this distribution trading range is, if you're not short here, you wait for the last point of supply to enter. I wouldn't recommend FOMOing in on a short, because of how, especially considering how choppy the market's been. So, you know, if you miss a short opportunity here, then you wait for the retest of the bottom and then the subsequent bounce for the last point of supply. That's the typical rule of thumb for trading in the trading range, is that you've got a couple of anchor points. You generally don't want to trade inside the trading range, but after an upthrust after distribution and we fail to make a new high with the last point of supply, that would be your entry, you know, somewhere in here. Anyway, sorry, I just rambled on for a good bit. Let's see some questions here, and I'll try to answer them. I still can't see a plausible reason for a new bull run this early. Well, you know, unfortunately, you know, what is the old saying? It's like, the market can stay irrational longer than you can stay, stay afloat or stay solvent. That's what it is. The market can stay irrational longer than you can. The market can always stay irrational longer than you can stay solvent. So, you know, that's a dangerous line of thinking to say that, like, I don't see a reason for the market to do this. You know, try to justify your edge, as Peter Brandt likes to say. You got to find your edge, right? What role does volume play in the trading range? Does it give us any clues? Yeah. So volume and price spread is all you need to really analyze a trading range. So one of the clues that we see, like, for example, the sign of weakness, we see a surge of volume here at the bottom of the trading range as it pushes into support. This is an indication of a test of selling pressure, and not only that, but of supply. And then we see it. So one of the dead giveaways that, or I don't like to say one of the dead giveaways, because that makes it sound like I'm 100% confident this is distribution. But one of the clues we can take away from this is every time it surges into support, we see spikes in volume. And as we approach the top of the trading range, or I'm sorry, as we approach the tail end of the trading range, we don't see volume consolidation. That's typically what we want to see if it's an accumulation trading range, right? We would want to see volume consolidating, which would indicate that overhanging supply has been absorbed, and that the composite operator is now grabbing hold of control of the market. So we don't see that. We don't see supply absorption here. What we would like to see if this is marking up is volume going down. Volume should be going down on this test to a new low, and it's not. If it goes down, that indicates, again, supply absorption by the composite operator. And as it pushes up, we would like to see decreasing volume, ideally, to show that you know, the composite operator is firmly in control of the market. But we don't see that. That's one of the other reasons why I really believe that this is a distribution trading range. Not only that, but just on a fundamental level, like if we zoom out to like the 2 hour, the 2 hour trend, we're sitting right at the supply line, right? If we go back throughout history, maybe the 4 hour trend would be nice. The supply line is where the market reverses typically. Here, 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 and here. So this would be the fourth reversal of an uptrend of a lower high. So 1, 2, 3, 4. And typically what we see on the supply line test is that we see no notable high in volume right around here. So if we go down here, you know, boom, we don't really see much volume. If we go down here, we don't really see much volume until it sells, right? So the volume is actually going down here. And then once again, here, it's, you know, there's no volume here, nothing notable. And what that indicates is that as we approach the supply line, volume should be decreasing in and around the supply line because supply is dominating the market rather than supply and demand. So if we're thinking about like a little scale, right? Supply and demand, supply and demand. If we see high volume and flat price, that means that supply equals demand. And if we see low volume on the way up, that means that supply is losing out on the demand battle and vice versa. So as we approach here, that indicates that you know, as the volume decreases, that indicates that demand is diminishing, and most likely the composite operator is no longer present on that upthrust. Are there any clues in the longs versus shorts? Yeah, I'll go over that in a second. I compared volume on the hourly time frame when we false broke out of the log trend around 11.8. Wait, what? I'm not sure I understand what you're saying. When would you consider an upthrust after distribution invalidated? A higher high? Yeah, so that's kind of the battle, right? Because if we go back and throughout the trend, we've made a similar pattern to this that broke up. We can talk about that. So we made a similar pattern here. And notice I'm saying similar, not exact, because if we compare, where is it? Here we go. Let's compare this to that, because this is something that I actually shorted that broke up. So I lost out on that trade, but that's life. So let's compare this and let's see the differences here. So if we're marking this as, this would be preliminary supply. This would be your, well, I guess this would be preliminary supply, right? PSY. This would be your buying climax, your automatic reaction, your secondary tests. This would be your, 6 right here. This would be your 7. So 7 / secondary test / upthrust. This would be your 8. This would be your 9. This would be your 10, and then I guess this would be, your little wiggle thing, right? So there's a lot of this floating on Twitter right now that this looks very similar to our current trading range, and I don't really see it. The biggest difference here, again, is that we see consolidating volume throughout the whole length of this thing, indicating that supply has been absorbed, and we're making higher lows on lower and lower volume, which means that supply is getting absorbed by the CO for the next push up. And that's just not what we see in our current trading range. This is a different situation here. But I will definitely be the first to admit that I misread this entire trading range. This ended up being a reaccumulation trading range, and I completely misread that you know, a few weeks ago or a few months ago, whenever the hell it was. In regards to your distribution theory, does the 1K green candle on 412? Let's go back to 412. Just the 1K candle on that's 312. 1K candle. Oh, this guy. Yeah, okay. 1K candle on 412, got it. Worry you at all, or does it confirm your distribution theory? No, it doesn't worry me at all. I mean, this was an accumulation, and it broke out. It was an accumulation breakout. It doesn't worry me at all. Okay, so this guy's saying, let me rephrase my question. I compared the volume between the 3.518, okay, 3.5, let's zoom out. So 3.5, okay. Oh, right here, okay. This guy. I compared the volume between the 3.518 and today when we broke out of the log down trend line. Today we had twice as much volume as we had made a fake out on the log trend. We had 2.9K Bitcoin volume on Bitfinex in 1 hour on March, and 7.4K volume exchanged in 1 hour today. Do you consider 7.4K Bitcoin enough volume to consider it as a real breakout this time? Okay, I think I understand your question. So you're just comparing raw volume? So the danger of just comparing raw volume is it doesn't really put anything into context. So we want to look at the trend, right? Like we don't want to look at just like a discrete data point because that's not going to tell you the overall direction of things. I don't look at that information with, I don't put much weight into that sort of analysis that you're doing. Maybe you find that helpful, but I personally don't find that helpful. Anyone have any other questions about this Bitcoin chart before we move on? You still think this is a bear trap? No, I think this is a bull trap, not a bear trap. It's also really interesting that we 100% retrace this breakout from here. So here's the previous distribution trading range, or redistribution rather. We retraced 100% to the breakout, but not above. So we haven't made a new high yet. If we make a new high here, people keep asking me like, what would it take for me to be bullish? A break above the supply line would be great. A break above this and finding support would be great. Personally, I just don't feel comfortable, opening up any sustained longs until I fully understand what Bitcoin's doing. Today, Morgan Stanley analysts reported that they believed... Today, Morgan Stanley analysts believed... God damn it, why do I keep saying that? Today, Morgan Stanley analysts reported that they believe that the 8,600 price level is believed to be the break-even point for miners. Does that influence your analysis? No, it doesn't. It doesn't influence my analysis. Is there a way to see when market makers fight each other for market dominance? or does that even happen? I'm sure that, yeah, I'm sure that happens for sure. I just don't personally find that to be very useful. What I find to be useful is thinking about the market in terms of like, so like if we're thinking about it in terms of a composite operator rather than multiple discrete operators. So rather than thinking of like, let's say we've got a 10 Bitcoin, obviously this isn't much, but 10 Bitcoin operator and a 3 Bitcoin operator, and one wants to push up and one wants to push down. Rather than thinking about them individually, I just think about them as a 7 Bitcoin operator that wants to go up. That's the easiest way for me to rationalize the market. But yeah, infighting between whales definitely happens for sure. I mean, it's pretty obvious. Like, remember when the OKCoin whale got liquidated for like a gajillion dollars plus his firstborn son? Like, he got liquidated for like multiple $1 million of a position. Like, that fucking happens all the time. Do you think that the market sentiment could change the outcome? Failed retests this time. Wait, say that again? Do you think that the market sentiment could change the outcome? No. Could you quickly point out what gave out the previous trading range was accumulation, and how is current trading range? Yeah, okay, so the question is basically what's the difference between current trading range and the previous trading range that looked very similar to it. So let's look at the 60-minute to keep the time frame consistent. Okay, so I'm just gonna truncate that. So pay attention to volumes. Volume's the biggest thing. Okay, so volume and the price levels. So look at this blue line right here. This is going to be the important one. And look at this guy right here. So our current trading range is not decreasing in volume, right? Not only that, but it's not decreasing in volatility either. We see flat, if not growing. Well, it's not really growing, is it? It's kind of just like, it's mostly flat, right? Not consolidating. First half of the trading range was low, 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 low. The second half is more flat, if not, more volatile with these giant spikes in here. Okay, so that's the biggest thing. The second thing is that pay attention to the price action. We're not making higher lows, right? So we're making a low, then a higher low, then an equal low, then a lower low. Okay, so the price action for the lows is going like this: boom, 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 boom. Right? I'm gonna pan over to the other trading range here in a second, but the other trading range was like this. The lows were going like this, and not only that, but the volume was consolidating. Okay, so keep this image in your head as we go to the other trading range. So we see a much cleaner, very different sort of trend here. Volume is going down. The lows are getting higher, and we don't see, like, yeah, there's like a little bit of volatility, but for the most part, like, there's a general direction to things. Like, it goes up, it goes down, it goes up, it goes down. Our current trading range is like this. This is our current trading range. This is the price action it's making. And volume's doing this, right? I mean, obviously not. I'm making a joke, but this is a very different situation, much cleaner, very clean consolidation of the trading range before the breakout, and then on the breakout, we see a surge of volume as the volume just kind of stays above the previous breakout level. So those are the two biggest differences: is the price action and the volume. So yeah, win 32. I hope that answered your question. B bands indicate an incoming move. Yeah. So, oh yeah. So let's go ahead and look at that, because there's an interesting trend on the 12-hour B bands here. We have a 12-hour, a potential setup for a 12-hour B bands M top. So M top is, we make a high outside the Bollinger Bands, and we make an absolute high inside the Bollinger Bands with a swing, with a pivot in between, so it makes an M. A B bands M top is a typical reversal pattern. Here's one right here, right? So it makes a high, and then it goes down at the bottom of the Bollinger Bands. Let's see if we can find another one. Here's a W bottom where it makes a W, returns to the midline, and then continues down. Here's the 12-hour setup right there. But what's interesting is that so the 12-hour B bands are squeezing, but as we go lower, the other B bands are expanding, which means that this could be a head fake. This could totally be a head fake on the 6-hour. Same thing on the 4-hour. These could be head fakes. But what's really interesting to me is that on the daily, the B bands are just starting to expand, which means that this would be a head fake as well, just like right here. So if we're looking like right here, so we had a squeeze, we had a bit of a head fake, and then it moved down. And I believe we had a similar sort of thing before, right? I'm trying to remember. I think we did that again in the past, but I can't find it at the moment. But that would make this a head fake before a pull down, if it's a distribution trading range. What's a head fake? A head fake is a false breakout to it's a false continuation breakout that actually ends up being a reversal. So like, if you have the Bollinger Bands that squeeze, right? They come together and they squeeze, and then you've got the price, price moving around inside the Bollinger Bands. A head fake would be like, it breaks out to the top, and people are like, yeah, cool, the Bollinger Bands are expanding, it's breaking up, but then it actually reverses, and that's, that's another type of reversal. Is that if it does pull down, this would be a head fake, and it would be an actual reversal signal. BCH and Ether are nearing the lower creek. Are you trading these shits? No, I'm actually not. I made the decision that I'm not going to. I mean, a lot of people in my trading group are trading them, and they're doing really well with them. And my girlfriend's first purchase of Ether was at like 360 or something like that. So I got her in on the spring on Ether, but I just made the decision that I'm trying a different strategy this time, and I'm gonna wait until I fully understand what Bitcoin's doing before I start buying alts. So I opted to sit that out. But yeah, those were really good trades. He's referring to, I'm assuming you mean the Ether Bitcoin or Ether USD. Which one are you referring to? I'm assuming you mean Bitcoin, right? Because Ether Bitcoin had a really nice accumulation trading range that it broke out of. So let's get rid of you. We see a really clean, for Ether Bitcoin, we see a really clean accumulation trading range in here. But it's pushing high. So this is very bullish in here. That does not mean that Ether USD is bullish though. So be careful about that. Just because Ether Bitcoin looks bullish, that doesn't mean that's going to translate to Ether USD in the event of a pullback by Bitcoin. So, overall, this looks very nice. Like we see a really clean accumulation. Again, we see the higher lows, the decreasing volume, and then all of a sudden, boom, injection of volume and a continuation of the uptrend. So Ether Bitcoin looks really nice right now. And then I think the question was about Bitcoin Cash as well. Yeah, I've been watching Bitcoin Cash. It's a very similar situation. I'm pretty bullish on Bitcoin Cash BTC right now. It looks pretty good. So let's look at that. It had oh, Jesus Christ. When you look at it, I haven't even looked at it on the 2 hour in a while. When you look at it on the 2 hour, that's just disgusting. That's fucking crazy. Jesus Christ. Yeah, I did that in 3 fucking days. Jesus. Bitcoin Cash was on a tear. But yeah, it had a very clear accumulation pattern, and then it broke out of the accumulation here on the 2 hour. But I think on a macro scale, it's also on an accumulation path as well. Where is that? Oh, on the USD pair, you see a pretty clear. So check this out. I'm going to show you the 6 hour trend. So I see a lot of similarities here. Get out of here, Bollinger Bands. So there's a lot of similarities here. Between my 2 circled things. And I believe we're, approximately here. Which makes sense. If Bitcoin does pull back, then BCH USD will pull back. But most likely won't make a new low. I don't think it'll break a new low here. I've been saying for a while that I think this is a spring. I think this is a spring. I think it's a spring on the BCH BTC pair. Just like it is here. I think it's going to jump this little creek. Boom. And it's going to go skyrocketing to new highs. I think it's for sure going to make new highs once Bitcoin bottoms out. So yeah, that's my take on BCH and Ether. Oh, you want to see Litecoin? Yeah, let's take a look at Litecoin. So, so here's an interesting trend I noticed on Litecoin 12 hour on the default Ichimoku settings. It bounced right off of that bearish cloud, but it looks like it's starting to trend in the right direction, right? So, Litecoin BTC. Oops. Yeah, we had a little bit of a death cross, and we found resistance here, but it's holding its own. And let's look at the daily. What does the daily look like? It's not quite ready, in my opinion, for accumulation. I don't think it's quite there. You see a little bit of a double bottom here, but it doesn't look quite right yet. I think Litecoin's it needs some time to mature. It's not quite in the standing that like Ether and Bitcoin Cash and a lot of the other alts are in right now. Is now a good time to buy in, or should I dollar cost average? You gotta do what you want, man. Do what you want. Why did you draw a second supply line on Bitcoin? Just because it's all in the interpretation, right? So like there are two different ways to draw it. You can draw it, I'll go into detail about it. So, did this show up on video? So there are two different ways to draw this, okay? One way is, do I want that? Yeah, all right, let's look at this. So one way to draw the supply line is to start at the wick, at the top wick. Sorry, let me clean this up for you guys so you can see it a little better. Let's make that 4 hour, or let's make it 2 hour. Okay, that's a little better. So I'll show you why I drew a second supply line. So there are two different ways to draw it. So if I, you want to start here, but the first line is drawn if you go to the wick of this candle, which you see it obviously chops through here. It chops through the trend here. The second option is if you draw it to the wick of this one and draw it to the wick of this one, you get two different supply line options. It just depends on how you want to draw it. And the second option seems to have won out for the time being. That's why, that's all. Still holding that GNT bag? No, I'm not holding anything other than Bitcoin right now. I sold all my coins a while ago. Why hold when you can get them for cheaper? Yeah, exactly. I mean, some people are more comfortable holding, and that's fine. Just different strokes for different folks. Current to 2014 log chart. Fractals look fairly the same. Shows a strong bounce from around here, then strong dip down. Okay. All right. Well, do you guys have any more questions? I'm gonna go ahead and plug myself here. For the next 10 days, there's I have a coupon code going. It's for my trading group. If you're interested in joining it, it's at bitcoinschmitcoin.com, and the coupon code is BearHug, which is valid for until the end of the month. And you get $50 off your first month. After that, it's going to go back to the normal pricing. But if you're interested in learning how to analyze the market the way I'm analyzing it, and you find the trading ranges to be helpful, you're more than welcome to join. That's coupon code BearHug, all one word. Oh yeah, can you cover the shorts and longs real quick? Yeah. Sorry, I keep forgetting to do that. Yeah, so let's look at the shorts and longs here, which is very interesting. So this whole up thrust that we just did today, like early this morning, was all driven by margin, which is interesting because that means at some point it has to close, right? It was a move from 83.15, 8,300 to 85.50, so a $250 move. And it was all on margin, and none of it's really closed yet. So this has to close at some point. And what happens when you close a margin long? Well, you have to sell it. The difference between this and buying raw supply is that you can hold on to that indefinitely, right? Even if you go underwater, there's no bill collector that's going to say, hey, we want our money back. So not only did a big ass margin long open, but margin shorts covered here. So it stands to reason that this, the CO theory is that using margin longs and shorts is that the CO doesn't care about the margin position. He cares about the raw supply. So he's just looking to break even on this long, right? So keep an eye out for these longs to close, which I suspect they're going to be closing fairly soon. And it looks like we're making our second pass at the supply line here. So, just stay on your toes. I'm fully expecting these longs to close. If you pay attention, like the number of longs is not increasing, even though the price is going up. So it's very clear that these giant moves. So you see them like here, 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 and here. The big moves are being used or being manipulated by margin. So just an interesting note. But the UT is supposed to be a bull trap made by COs. Yeah, that's right. How do you show those longs and shorts in TradingView? You type in BTC USD in cryptocurrency, and they're right there. It shows it on Bitfinex. I think it only shows it on Bitfinex. And then I just move them down. Anyway, that's all I got for you guys. Be careful out there. Maybe I'll be proven wrong and this will just rally onto a new high. I mean, honestly, that's what I would like to happen. I don't want to be sitting here waiting for a short entry. So I'd like to just sit on Bitcoin and let it ride. That would be ideal. But, I just see an overwhelming amount of evidence that makes it way more in the favor of the seller at the moment. But anyway, if you'd like to join my trading group, it's at bitcoinschmitcoin.com. And for the next 10 days left on this coupon code. It's coupon code BearHug for $50 off your first month. But yeah, also, I'll go ahead and say this too. If you guys like the streams, drop a like and share it, because it really does. It helps with my my YouTube metrics, and I've been slowly climbing in concurrent viewers for the past couple months. I wasn't maintaining triple digit numbers, and now I'm slowly climbing in the triple digits. So thanks to everyone that's been sharing all that stuff. It really helps a lot. But yeah, that's all I got for you guys. You guys have a great rest of your week, and yeah, don't stare at the charts too long. Bye.